Just doing a test recording, having a look at the market for the week. Today is Wednesday, November 20th, I believe. And yes, it is. Anyway, let's go through the market and have a look at what's going on. We got the S&P 500 up 14.6 points today. 1,162 points year to date. 24% return year to date on the S&P 500. Absolutely amazing. On the monthly, it's up about 59 points, 60 points for the last month, 1%. And in the last week, we are down about 1% in the last 5 days, 61 points. Anyway, let's go back to the yearly, and we'll keep going through the program here. Next, we have the Nasdaq at 20,765 today, up 69.2 points, up 4,944 points for the year, 31.25%. Insane. Year to date, 3 months, it is up 966 points in the last 3 months, 5%. So we've had a 5% move up in the last 3 months. In the last month, we've had a 1.9% move up, 396 points. Last 5 days, we are minus 316 points at 1.5% in the last 5 days. So we haven't recovered on the Nasdaq yet. Back to the year to date. Yeah, we haven't recovered from last week's high. And we had about a 3% drop, it looked like there. Yeah, 3% drop last week, and then now we're climbing back up. We're 1.62% off of last week's low. Back over and continuing, we got the Dow Jones, 43,405, up 153 points today. 8,480 points, 24.28% for the last year. Absolutely insane. Dow Jones, way to go. You just keep going higher. Now, over to the Russell 2K. We are up 3.36%. Yeah, I'm not going to go into deep dive into every single one of these, but we're just going to go and we're going to have a look here. We are up 532 points, 29.65% for the last year. And just having a thought there in my head. I keep hearing how the Russell's always the laggard, and there's so much more to come with it, blah, 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 blah. But yet, it's up just as high as the rest of them. Anyway, back on the year to date. Yeah, it looks better. Moving on, we're going to have a look at treasuries. Right now, the yields in the States are climbing back up since September 18th-ish. September 15th. We had rates climbing back up. They were at the low 3.76% on the 10-year. And then Powell cut rates. He did a rate cut. Powell did a rate cut on September 15th. 50 basis points again. I remember that. But ever since then, the yields have been going higher. So he did a rate cut, yet interest rates are going higher. So let's just think about this here. Interest rates on the 10-year are going higher. They're at 4.30%. Let's go to the 2-year. We're at 4.308%. So let's go back to the 10-year, 4.43. 2-year, 4.31. So, like, you know, what they're saying right there is that, like, you know, there's no point in buying 10-year bonds when you can just buy 2-year bonds. That's kind of like, you know, the long end of the curve and the short end of the curve are at the, like, they're basically at the same interest rate. That kind of doesn't make sense. Now, skipping on, short term, we had our little, ever since rates, the 1 to 3-year treasuries, ever since September 15th-ish, now they've been all selling off. And then now we've hit this little area where we did possibly come back into buyers. But it's not confirmed yet, because those are still, like, you know, weak little candles right there. They're nothing saying. It looks something like one of these down here where, you know, you got a nice, like, real big wick on the bottom of that candle and it comes back up. No, we don't have that where we were just there. Like, we could be still in a downtrend on rates. And, like, which means yields up. Yeah, it's hard for me to explain it because it's backwards. Anyway, moving on to Canada. It's the same kind of picture. Well, a little bit different in Canada. Year to date, where's our September meeting? So it's just like the same thing. When Powell cut rates in the States, now our rates have been ticking up as well. So what this is telling me, this is going to be good for buying GICs and stuff like Wealthsimple, you know, like Tangerine or anywhere where that's going to give you an interest rate, or holding cash in an account that's going to be paying an interest rate, because interest rates are going higher again. Where are they probably going to go? Let's just let's just say if we are coming out of this downtrend and rates have bottomed out since Powell cut rates, and now they're climbing back up again. Where would they go? Well, on the 2-year in Canada, it's looking like it's going to be, you know, somewhere in between where we are now and 4.30%. 4.5. Like, we drew a line somewhere around this area where we can get one there. It was the low of that one, about 3.70. We could be easily back there in the next couple of months. Going up into springtime next year, we can be back at 4.5. That means that everything's gonna get expensive again, but whatever. It's gonna be good for savings. And that's another way we got to look at this, because we'll be able to buy bonds at GICs, whatever, that pay an interest rate. I mean, if you're going to get paid, 3.75% to sit on cash for, 90 days or something like that, 2 years, it's not bad. Most of the banks in Canada are still giving that right now on their interest rates, so it's not too far away now. Let's continue on, and we'll have a look at the 10-year. 10-year is kind of like the same thing. It's a little bit cleaner of a chart, and this isn't the best chart because it's just a bond yield chart and not a bond price chart. Remember, price charts are going to look different than yield charts. Everything's upside down and backwards. Continuing on, where's the 10-year? Right now, we're about 3.4%, 3.36. Next couple of months, we could be coming back up into that 3.8. Probably, worse off for people that want to buy a house or something, but if you want to save, not going to be too bad. That's just what I'm thinking on yields. And that's Canada. And here's the 30. No, sorry, that was the 10-year Canada. And that wouldn't really have as much to do with your mortgage bonds, but it's going to have more to do with maturing 10-year bonds and stuff like that. This would be the mortgage bond, 3.4%, and it looks the exact same thing as the 10-year. So basically, they're just tracking each other, because just yield curves are all over the place. It seems like there's no rhyme or reason. It's like you have a 10-year, a 2-year, and a 3-year all trading within a couple of basis points of one another. And it's all got to do with the manipulation and bond manipulation around the world. Money markets, it's hard for me to put it all together without just going off on a tangent. It's pretty easy to do. Now, where are we at next here? U.S. dollar, but I think I had one before that. Nope. Anyway, moving on to the dollar. U.S. dollar index has been going pretty strong. I mean, since that rate decision, the cut rates, Powell cut rates. Remember, he cut the federal funds rate by 50 basis points or whatever, and yet interest rates are going higher, and yet dollar's going higher. Dollar's been ripping for the last month, and it looks like it's still got room to go. Could it be getting close to the top for the year? Possibly, I don't know. But when you see something like this, bonds are really intertwined with the U.S. dollar. So we go back, it's, the same thing with Canadian bonds too. Everything tied to the U.S. dollar. So we got bond yields in Canada and the States now going higher. We got the dollar in the States going higher. We got the euro going lower against the dollar, down about 4% year to date, which this is all coming into context here. We're at the 105.58. Where do we go from here to lower? So, here's the thing. On the dollar index, the last year's high was about 107.40. And we're, pretty much, that's, right there. Right above that candle. I got it marked on the chart, but we're not there yet. Now, we're going to look at the yen now. And now, this chart makes a little bit more sense. So, we're looking at USD JPY. I'm thinking that this dollar run is probably going to come up and try to test that old high. I know my mouse is hard to see, I don't even know if you can see it or not. I can, and I can't draw on this chart yet, but if you look at where we are right now, left, and then up to that point, 160, we're at about 155.70. So I'm thinking that we easily can come up to here if we get that breakout on that dollar. It's been running for a while and it's just consolidating the last week, but there is still more room for dollar go up. Copy time, sorry. Now, back to what I was saying about we get the dollar index. I'd say right about if we start making green candles in here on the dollar index, one more big candle in the next week, month, easily could push euro dollar probably down to 103, 102, 101. USD JPY could probably come up to that 160 level, and then we go sideways again from there. Maybe repeat this same last pattern as before. It's all about replication. Spotting these things, it's the same thing too. Here, we had a rate decision. Rates get cut, yet rates go up, bonds go up, bond rates. Federal interest rates get cut, bond yields go higher. Oh, it's just so fucking confusing and complicated. Why do they have to have a system so nuts is what I'm saying. Anyway, same thing with the pound dollar here. Now, this is pretty much flat for the year. We're right back to square one. We can we could get a bounce here, but I'd be more surprised if we did. I'd be less surprised if we just keep going down. Rates pretty much to 124-ish, 120. 118, and that could be it for the run. Then time to start buying pound again, I guess. We'll see from there. Now we go look at crude oil today. We're up, well, today we're up 29 cents, 0.43%. Now, the interesting thing about oil, like, I think it's kind of putting a bottom in here. And I mean, like, you get that one last push down, and then now we're trying to get above it again. And we'll, like, let's just wait and see if we do. If we do get above last week's little high, like, we get last week's, we break that candle from last week, we definitely can come up and test that 76 area easy again. It's just basically like hurry up and sit on my hands and wait. Now, here's the one that I was looking at. I'm thinking I might get in and throw $1 on this one because of this chart right here. Like, just on a 3-month, we had a nice run up, we gapped up, and then, gradual, 45-degree pullback. Like, this is like, perfect. And then now we kind of created a little bottom there, and like, this looks like it breaking above it now. Freeport McMoran, FCX, and that's gonna go on the list today. So let's go over, and we're gonna add that right now. And I'm gonna go to putting $1 on this one today. My $1 on this one. Actually, I'm gonna put $1.50. I got a couple more that I'm gonna buy, like, right now. I love trading fractional shares. It's so much fun. And I'm buying some Eli Lilly today. And I'm putting like $3 on this one. Actually, 2. Because I got 2 more to get. I got $6.71 to play with. So I bought $2 of that today. And next I want mRNA. Just had a 20% pullback, and I want $2 of mRNA. And my last trade for today is BIIB. Biogen. That had another huge freaking drop. Where did it go? Buying this. And I'm going to throw $2 on this one. There we go. So, that's all I'm doing. And, well, simple today. I just bought $7 worth of stock. There we go. Because all these companies, all the last 3 I just did, all had a rough week last week, and looks like the market's starting to give them a little bit of a break. So whatever. They had 20% drops. Some of them did. And now it's just time to take a chance. And I'm only putting $1 in, so whatever. See what happens. Back to what we came here for. So yeah, that was at Freeport McMoran. And Biogen, yeah, that was the other one. It's an ugly chart, but it's gapped up in the pre-market, it was. Yeah, and then that was it for that. Now, let's go over why I picked that Freeport. Where did I find that one? Instead of the blue, throw a hat. No, I looked on the sector tracker, the sector spdrs.com sector tracker, and I switched it up there to the 1 month, and like I came down and I'm like, well, what's down a lot this month? I mean, like, this market's still pretty healthy and keeps going higher. So I looked in materials XLB, and I went through it, and there it was. Freeport McMoran. It's a hard one to say. 5% that one was down. I just liked, or 8%. Yeah, 8% it was down for the month. But, I just like that chart. I like that setup. And like I said, I only threw $1.50 on it. And that's a fractional share, so I can trade my way out of this if it just keeps going lower. And it likely can. But anyway, like, this is how I'm going to find my stocks. I'm gonna look within each of the sectors to pick, or you know what I mean. Like, it's also good too if you're looking at a stock, and if it is in the S&P 500, and like, let's just say your stock is Disney, Warner Brothers, or Warner Brothers Discovery, which isn't Disney. There we go, Walt Disney. So there we go. So like, let's just say if your stock's Walt Disney, and like, you didn't even know, like, well, how much is it up there? Now you know. If you were buying it today, it's already up 15% for the month. Might not be a great idea. Might be a really good idea. Excuse me. There's a lot I don't know. But like, yeah, like, everything's had a really good run. I'm really not in a hurry to be like, buying everything out there like there's no tomorrow. There will be opportunities. And where could they be? Well, like, that's why I picked the stocks that I did today in the healthcare, because where and there's the Biogen. So you got Biogen, Eli Lilly. They're down like 18 to 20% in the last month. And I think I had mRNA in there too. Yeah, right there. 31%. So that's where I picked up my stocks from, just by looking at what was down, what got beat up the most in a overall healthy market. And not to say like these can't keep going lower, but I mean, like, when you're trading fractional shares and you're not throwing thousands of dollars and basically just gambling on it, I mean, possibilities are there that I can get a few percentage points out of it. Yeah, I'm just having a look here at the pound yen, or not pound yen, pound dollar. I'm starting to think that these are trending currencies, where they have been trending. They're not like looking at like pound yen, where it's pound yen's just so damn exciting. Like these dollar currencies are just boring. But I'm thinking boring might be very interesting. Very interesting. Especially we get down in this, this below this 122 on the pound. If we can get down below in there and stop out a whole bunch of people that were long from, April, come down to that 120, 118, be like long term buying opportunity again. Dollar's not gonna run forever. It's gonna run a little hot for a little longer, and then it's probably gonna just do the same thing as always, just go the other way. Like, it'll be the pound's turn again. It's only a matter of time, before the pound turns around, and then you get like another one of these. And it can happen like right up there. It's hard to say. It can happen here, and we go higher. I think we'll put it down to 118, and we come back up somewhere to where we are right now. That's just what I think. But that's it's hard to chart on an iPhone, but you know what I mean? Time. I got a lot of time on my side, and I want to wait to be a buyer. I want to wait and see what interest rates are going to do in the next few days. Look at oil. Yeah, now we're starting to tick up. Really starting to tick up on oil now, and that's like a good thing, because I got that. Phone's about to die, so I gotta cut this off pretty quick. Yeah, we're pushing up higher. And I am up. I'm I'm up $11 on this trade now. So I'm gonna hold this for a little bit longer. I might make a decision here after the New York Open to close it or something like that. But I'm in no hurry right now. I love to see it come up into this 73 area before closing the trade, but I mean, it's just a patience factor. I could even hold it up into the 78, 79. How much patience is it? It's hard to sit on something for that long, but how worth it is. It hasn't been much risk. My max drawdown for 3 days or 2 days was $16. And I could have traded my way out of it by just simply adding a little bit more margin, because I wouldn't have been stopped out that was 16 minus 16. Maybe 65 might have been like minus 30. Yeah, I would have, it's so much easier to trade with less leverage. It's just not as, not as exciting. And I'm going to start getting spammed with, Facebook stuff. Because it's 10 o'clock in the morning and everyone's waking up. 1176, 120 pips right now. Not enough. We'll wait a little bit longer on this one. Just sit on my hands as usual. Anyway, I better cut this video off here before my battery dies. Just having a look at the markets this week and my thoughts on them, that's all. Not more. Have a good one.